Assalamualaikum warahmatullahi wabarakatuh. Hello everyone. We are from fifth group. We want to start our presentation about budget for factory overhead costs and cost of production. Before we start our presentation, let me introduce our member. Rika Indriani as presenter 2, Kusumah Ingwahyu as presenter 3, and Sophie Anindya Putri as presenter 1. Okay, let's start the presentation. What is factory overhead budget? Factory overhead budget is a detailed planning of indirect production costs or BOP for a certain period to come. This planning includes plans for the types of factory overhead costs, the amount of factory overhead costs, and the timing of the factory overhead costs, which are adjusted to each department where the factory overhead costs occur. There are 5 factors that need to be considered when preparing the FOH budget. The first, the unit budget to be produced. Second, various standards have been set by companies and regulators. 3. The wage payment system used by the company. 4. Depreciation method used. And the last, the cost allocation method used. Next, classification of costs based on cost behaviors. First, fixed costs. Costs that does not change or remain at various level of production, but at the review, the raw material level or primary, further processing of raw material or secondary, and the distribution level or territory. Second, variable costs. Costs whose that amount changes proportionally according to the amount of production in a certain period. Third, semi-variable costs. Costs whose that amount changes but is not proportional to change in the amount of production. Classification of factory overhead costs according to their relationship with the department. First, FOH direct department. FOH that occurs in a certain department and its benefits are only enjoyed by that department. Example, production department for main salary, machine department costs, and auxiliary material costs. Second, FOH indirect department. FOH whose benefits are enjoyed by more than one department. Example, depreciation, maintenance, and insurance costs. Then, classification of overhead by cost nature. First, cost of auxiliary materials. Second, repair and maintenance costs. Third, indirect labor costs. Fourth, costs incurred as a result of the appraisal of fixed asset. Fifth, costs incurred as a result of the passage of time. And sixth, other factory overhead costs that directly require cash disbursement. There are steps to arrange factory overhead cost budget. First, for fixed costs, the costs for the future period are determined to be the same as for the previous period. Second, variable costs will be determined based on certain rates that are adjusted to future conditions. Third, for semi-variable costs, it usually determined by analyzing historical costs over the past several periods, then classifying them into fixed costs and variable costs. Prepare factory overhead cost budget. Must pay attention to the level of activity or capacity that will be used as the basis for estimating factory overhead costs. The theoretical capacity is the capacity of a factory or department to produce at full speed without stopping for a sustained period of time. 3 types of capacity can be used as the basis for making FOH budget. First, Practical capacity is the theoretical capacity reduced by time loss that cannot be avoided due to internal constraints of the company. Second, normal capacity is the company's ability to produce and sell its products in the long term. And the third, actual expected capacity. It is actual capacity that is expected to be achieved in the coming year. There are four benefits on factory overhead cost budget. First, this determines the extent to which the planning can be realized or the accuracy of the budget that is made. Second, to find out the amount of factory overhead costs so that they can be measured. Third, to determine accountability according to each department or division. Four, to evaluate or correct the factory overhead costs incurred by the company. Next, determination of tariff to calculate the FOH budget. First, by product unit. The formula is overhead absorption rate equal estimate FOH divided by estimate unit of output times 100%. Example, estimate FOH for one fiscal year is 2 million. The estimate number of products that will be produced during the fiscal year is 4,000 units. For FOH rate per unit is 2 million divided by 4,000 units equal 500 per unit of product. This method is suitable for use in companies that produce by one product. Second, raw material cost. The formula is overhead absorption rate equal estimate FOH divided by estimate material cost times 100%. Example, estimate for FOH for budget year is 2 million. Estimate raw material cost for one fiscal year is 4 million. FOH estimate FOH equal 2 million divided by 4 million times 100%. The result is 50% of the cost of the raw material used. This method of limit use because the greater the cost of raw material incurred in product processing, the greater the FOH charged to it.
Okay, here I will next the material about determination of tariff to calculate the factory overhead budget. And the third, there is labor cost, which formula is overhead absorption rate is amount by estimated factory overhead divided by estimated labor cost times 100%. For example, estimated factory overhead for one fiscal year is 2 million rupiah. Estimated direct labor cost for one fiscal year is 5 million rupiah. And then the factory overhead rate is 2 million rupiah divided by 5 million rupiah times 100%, and the amount is 40% of direct labor cost used. The next is direct labor hours, which the formula is overhead absorption rate is estimated factory overhead divided by estimated labor hours times 100%. Estimated factory overhead for one budget year is 2 million rupiah. Estimated direct labor hours during fiscal year is 2,000, and the factory overhead rate is 2 million rupiah divided by 2,000, so the amount is 1,000 per hour of direct labor. And the last is machine clock, which the formula is overhead absorption rate is estimated factory overhead divided by estimated machine hours times 100%. For example, estimated factory overhead for one budget year is 2 million rupiah. Estimated engine hours for the fiscal year is 10,000 engine hours. So the factory overhead rate is 2 million rupiah divided by 10,000. So the amount is 200 per machine hour. Okay, the next is example of factory overhead cost budget problem. In the table, we can see there is a department, nature, the amount of the cost, and the activity level. For the point A, there is assembly with the nature of production. The amount of the cost is 4 million rupiah with the activity level is 10,000 direct machine hours. For the point B, there is the settlement with the nature of production. The amount of the cost is 2 million rupiah with the activity level is 5,000 direct labor hours. And the point C, there is a workshop as X with the nature is services with the amount of the cost is 1 million rupiah with the activity level is 1,000 DRH. And the point D, there is diesel or Y with the nature is services with the amount of the cost is 1 million rupiah with the activity level 1,000 kWh. From that data, the use of the result of the activities of the service department, we can see from the table there are providing services, assembly, the settlement, workshop, and diesel. Which department workshop has assembly for 40%, the settlement 40%, there is nothing for workshop, and 20% for diesel. And for department diesel, there is assembly for 50%, the settlement 40%, the workshop 40%, and there is nothing for diesel. The annual data available from PT Amor is as follows. There are factoring overhead costs, use of the result of activities of the service department, and the requested is determine the equation that applies to both service department, calculating the amount of the net factory overhead for each service department after giving and receiving each other services, calculating the total factory overhead for each production department, and the last is determine the factory overhead rate of each production department per DMH and per DLH. So, the algebraic equation for FOH for each department services after giving each other receiving services are based on the information that X is factory overhead department repair shop services after receiving factory overhead allocation from the department diesel services, Y is FOH department diesel services after receiving FOH allocation from the department repair shop services, A1 for FOH department repair shop services before receiving FOH allocation from the department diesel services, A2 for FOH department diesel services before receiving FOH allocation from the department repair shop services, B1 for percentage of department diesel services by the department repair shop services, and B2 is the percentage of department workshop services by the department diesel services. With the formula, so we can find that the X is 1,122,449 and the Y is 1,224,490. So the next is how to calculate the net factory overhead for each service department. From the table we can see there are information department workshop and department diesel. Budget factory overhead from department workshop is 1 million rupiah and department diesel is same, there is 1 million rupiah, and reserve factory overhead from department diesel is 0.1 times 1,122,449. So department workshop is 122,449, and for department workshop is 0.2 times 1,224,490. So for department diesel, the amount is 224,490. Give factory overhead to department workshop is minus from department diesel, and department diesel is minus from department workshop. So net factory overhead respectively is 897,959 for department workshop and 1,102,041 for department diesel. For the next is calculate about the total factory overhead for each department production. From the table we can see the information, the assembly and the settlement. From the budget factory overhead with the assembly is 4 million rupiah and the settlement is 2 million rupiah. FOH allocation from department workshop is 40 divided by 80 time 897,959, so the amount is 444,979.5 for assembly, and for the settlement is the same. So next, to department diesel, there is 50 divided by 90 times 1,102 and 41, so the amount for assembly is 612,245, and 40 divided by 90 times 1,102,41, so the settlement is 489,796. So the total factory overhead for assembly is 5,091,224.5, and the settlement is 2,938,775.5 for the settlement. So the next is how to calculate factory overhead rates for each department production for each activity unit. Factory overhead department direct machine hours unit assembly is 5,061,224.5 divided by 10,000, so the amount is 506. And for factory overhead department settlement per direct labor hours unit is 2,938,775.5 divided by 5,000, so the amount is 587.76. Next, there are examples of cost of production budget problem. For example, PT ABC sells plant product X 60,000 units for each is 200 and Y is 40,000 units for each is 250. Projected inventory initial X is 20,000 units and Y is 8 units. At the end, X is 25,000 units and Y is 90,000 units. Sales are paid 70% cash and the remaining is credit. The available data are as follows from the table price and use of raw material. For table caption, labor wage to make 1 unit of product X takes 2 hours. The tariff is 20 rupiah and Y is 3 hours. Tariff is 16 rupiah. Factory overhead cost rates are based on the direct labor hours. Variable rates are 80 per hour rupiah. Also fixed rate of 12 rupiah per hour. Of the fixed rate of 20% is the depreciation expense of the plant's fixed asset. Assumption 50% cash for the material purchases, the remaining is credit. The finished good inventory for good X begins at 125,000 rupiah for 1,000 unit and end with 500 unit for product Y is 90,000 rupiah for 500 unit and the ending period is 400 units. The table presentation in compiling the cost of goods sold budget and the cost of goods sold, it starts from compiling the sales budget in unit of sales volume and in sales value. Then the continues to compile the production budget in unit, raw material requirement budget, raw material purchase budget, labor cost budget, overhead cost budget. Factories, the budget for the cost of goods manufactured and the budget for the cost of goods sold. The stages are carried out as follows from the information from the table.
Okay, for the next step, we must calculate about production budget in units, raw material use budget, and budget for purchasing raw materials. I'm sure that all of you already know how to calculate it because this is our material in the last meeting. So, I will give you a conclusion about information that we conclude in that three table. There are three information. There are total purchase, cash purchase, and credit purchase. We can calculate it total purchase from raw material use budget is equal to 7,034,000. After that, we calculate cash purchase. Cash purchase is 50%. It's from the question. We already know the 50% is written in the question that cash purchase is 50%. And after that, we times with the total purchase equals 3,050 and 570,000 for one cash disbursement. After that, for the credit purchase is already same with the cash purchase is 50% times with the total purchase equal 3 million and 570,000.
Okay, for the next step is to calculate it about labor budget and factory overhead cost budget. For the labor budget, I'm sure that you all already know because this is also our last material in the last meeting. How to calculate it labor budget is with use formula that total unit times labor hour times price, and we already know the labor budget. And next is to calculate it factory overhead cost budget. We have formula unit times with the hours, and after that we times again with the price. After that we have now the total of factory overhead cost budget. And for this information from that two tables, we can give information. We can calculate it. Depreciation is calculated as 20% at times with the factory overhead cost budget. After that, we calculated FOH per case 80% times with the factory overhead cost budget. And after that, we calculated paid 80% case times with the FOH per case. After that, we have outstanding FOH. So after we have all information, we can make cost of production budget. So in the cost of production budget, we just added the information that we all already calculated, that products X and product Y. That is A raw material, B raw material, and C raw material. After that, there are labor budget and factory overhead cost budget. After that, we equals all of the factor of products X and products Y. After we have the total, we divide it with the unit of product X and products Y. So we have the amount of per unit products X and per unit of product Y. Okay, the next material that I want to explain to you is difficulty in arranging factory overhead costs or sheets. The many obstacles in determining the POP of FOH are a separate problem in accounting records. These factory overhead costs can occur regularly, can also occur erratically in one period, and there are many kinds, so that sometimes companies have difficulty in determining whether the factory overhead costs incurred are in accordance with the budget or inefficiency occurs. This is what makes it difficult for the company to track the costs incurred, which result in a loss for the company. And so, what is production cost? Production cost is a list of production costs that the company must pay for a certain period, and it's related to the cost of procuring raw materials, production support materials, and so on. Next is factors that need to be considered when preparing production costs. I have 6 factors. First, sales plan. The second is factory capacity and available plant equipment. Third, labor unit. Fourth, availability of raw materials. Fifth, working capital required, and 6. Warehouse capacity. For the classification of costs in production costs, there are three classifications. First is direct raw material cost. It's a cost of the main raw material that affects the production process. Example, a soybean tofu company. The second is direct labor cost. It is labor cost that is directly involved in the production process. Example is the cost of labor for production. And the last is factory overhead cost. It's a cost involved in the production process other than direct raw materials cost and direct labor costs. The next slide is explain about step to prepare a cost of production budget. Compiling a budget for the cost of production must start from compiling a sales budget both in units and in rupiah value. Then process to compiling a production budget in units. After knowing the production budget in units, process to compile a raw material budget, a purchase and use, a labor cost budget or a labor wage budget, and a factory overhead budget. This step is same that I already explained for you in the example of cost production budget. The last is we have case study for you. The question is PT Surya produce goods X through two production department and two service departments. The following is data related to the production process of PT Surya. First is factory overhead cost, and the second is use of the result of activity of service department. So the question is A. Calculated the net BOP of department service after mutual member and receiving service, and B. Calculated the BOP for the whole department production after absorbing BOP department service.
Okay guys, thank you for watching our presentation. Assalamualaikum warahmatullahi wabarakatuh.